Ethereum in 2022. Is this going to be the year of Ethereum, or is it too little, too late for Ethereum and it's going to get blockbustered by Solana or one of the other many chains coming up competing against Ethereum? In today's video, I want to discuss that exact topic. My name is Lark. Every day I make videos talking about cryptocurrency investing. So if that's a topic that you appreciate learning some more about, then if I could ask for just a quick tap on the thumbs up button, just for the YouTube algorithm, that would be super amazing. By the way, every single week my team and I produce Wealth Mastery. This is a cryptocurrency investor report designed to help keep you ahead of the curve in this fast-moving market. Every single issue, you're going to get a DeFi tutorial, an altcoin report, technical analysis, portfolio updates, airdrops, token sales, NFTs, and much, much more. All of that for less than $10 a week for premium members, or you can just go ahead and sign up for freaking free. $0 free. In the description down below, you'll find the link. Now let's go ahead and get into our topic here. First off, let's just hit you with a few fun facts for Ethereum right now. Ethereum burn rate a couple days ago got up to 11.4 Ethereum per minute. We are just burning through Ethereum like crazy, which for the long-term economics of Ethereum is a positive thing because that will start reducing supply, making the remaining supply more scarce, pushing the prices up. At least that is the idea with EIP 1559, the critical Ethereum upgrade that is burning off all that Ethereum. The Ethereum 2.0 deposit contract has surpassed $30 billion in value. That means there's a lot of people out there that have a lot of conviction in the future of Ethereum. $30 billion worth of conviction in the future of Ethereum. That is a lot of cheddar on the line here from Ethereum believers, those who believe that Ethereum 2.0 is going to be a game-changing upgrade for the network and for the entire cryptocurrency space. Now, obviously, we have the staking contract live, but everyone's getting excited about the next steps. The staking contract's been live for quite a while now. It is time for us to move on, time for us to start doing the next thing and move on to proof of stake, move on to sharding, move on to all these critical upgrades that are going to make the Ethereum network even better. So Ethereum validators are now being asked to start preparing for the merge ahead of the full proof of stake rollout later in 2022. So it is coming now. Here are the estimates. Post-merge, that means once we have transitioned from proof of work to proof of stake, once we have implemented sharding, which at this point may not come until 2023, although we may get some unlimited sharding on Ethereum later this year. Vitalik said we might have 3 or 4 shards instead of going to 64 shards straight away. So that would do a 3 to 4x transaction per second improvement for Ethereum. Obviously, we want to get the 64x, but that's probably not until 2023. But we could get the 3 to 4x improvement this year, which would be a positive thing. Anyway, looking forward, when we have proof of stake, when we have sharding with rollup technology integrated, we can be looking at 25 to 100,000 transactions per second for Ethereum. Now that is the kind of scalability that we actually need to see for Ethereum in order for it to be the settlement layer of the internet in a very meaningful way, to handle DeFi, to handle stablecoin transfers, to handle NFTs, to handle gaming, all that stuff. That is what we need to get to. So we shall see, of course, how things roll out for Ethereum over the next year. But that is the vision for a completed Ethereum 2.0. Now, in terms of the move to proof of stake, the merge testnet, we already have some testnets out there in the wild. The first one was released about a month ago, approximately. That had a split bug in it the other day, but this is why you launch testnets. You launch them to test things out. They're going to get bugs. There all kinds of stuff's going to happen, which is exactly why you run testnets. Battle test them really hard before you, of course, launch it onto the mainnet, because there's a lot of money at stake here with the merge, and if they screw it up, obviously a very bad thing. I believe the Ethereum team will, of course, get it right, which is why they're running test nets. But it's exciting to see the test nets out there. That's what I'm excited about. Test nets will have bugs. That's why I have test nets. But the exciting thing is that they're out there in the wild doing it, right? It's actually happening. Now, when can we expect proof of stake on the mainnet? Well, according to Vitalik, he said that the merge is going to happen by July. So is that, June 27th, June 28th, something like that? Maybe, we shall see. We don't have a definitive date yet. However, within the first half of the year, that is the current, of course, estimate from the team. Just so you know, tech gets delayed, rollouts get delayed, unexpected things can happen. So, don't go holding your breath waiting for that by July launch. However, I hope that this will indeed be when we do get proof of stake launched for Ethereum. I think it's going to be a big upgrade because it's going to have like a 99.7% reduction in energy use for the Ethereum network. Now, one of the big criticisms here right now is that, NFTs are bad because they use up so much energy. And yeah, right now, one NFT uses up a lot of energy. When we switch Ethereum over to proof of stake, that is going to bring the energy use down dramatically. So that will be a very, very positive thing. Obviously, networks like Solana and stuff also have NFTs. Polygon has NFTs. They have a tiny energy impact compared to Ethereum, but we're talking about Ethereum in this video, so that'll be a very positive thing, narrative-wise, and of course, environmentally for Ethereum when we do get the merge happening. Also, a big part of the move to proof of stake is the drop in issuance. We're going to see a 90% reduction in the Ethereum issuance, which is a big, big deal economically for Ethereum. That makes me very bullish on Ethereum. The economics of it are crazy with the EIP 1559, the triple halving, that's the 90% reduction. So we have the triple halving coming, the move to proof of stake. All this stuff is really good for Ethereum. However, the move to proof of stake is not going to have any impact on transaction fees, which sucks, realistically. After the proof of stake merge happens, yes, then the focus will be on bringing out the early stages of network sharding. So as mentioned, they're going to look to bring in 3 or 4 network shards for Ethereum, which will increase the transactions per second by 3 to 4 times, which until that extra capacity gets all sucked up, which may happen pretty quickly, it should at least lower fees some. We shall see, of course, how that happens. But yeah, don't go expecting the fees to get lower when we move to proof of stake for Ethereum, which is disappointing because obviously the fee situation on Ethereum is frequently freaking redonkulous. You can see here, it's just all over the place right now. Let me just refresh this because it's still stuck on $100 there. It was $100 to do a token transfer about 10 minutes ago, but the price has since come back down. Only $34 to send tokens from point A to point B. Only $100 to do a swap on Uniswap. Come on, man. What is up with these fees? The fees, of course, right now, Ethereum is a victim of its own success. The fees are the biggest thing holding Ethereum back at the moment. But the good news is that Ethereum Layer 2s are really starting to take off. We see Arbitrum with $2.7 billion total value locked. DYDX, Loopring, Optimism, Metis is coming up and getting some market share here. Boba, all these guys, Immutable X, we have a lot of layer 2 scaling solutions. Look at this, 19 different layer 2 scaling solutions listed here, and that, of course, doesn't even include Polygon, which is an Ethereum sidechain. It's not technically a layer 2, it's technically a sidechain. Semantically, for most people, it helps scale Ethereum by allowing Ethereum applications like Uniswap to come over to the Polygon network. But things like Arbitrum, they actually use Ethereum as the gas of the network, where Polygon uses the Matic token as gas of the network. So very much related, but a little bit different. Nevertheless, layer 2s are here. They're working. You can use them. They are a pretty good user experience. Arbitrum, for example, fees are like 1/10 of what they are on the main chain. So, still a bit obviously. So in the current gas conditions, it'd be $3 to send some tokens from point A to point B, and it'd be $10 to do a swap on Uniswap, which, hey, that is way better than the alternative. But then you go over to Polygon, and that same swap on Uniswap all of a sudden costs a penny. You go over to Solana, and that same swap on Radium costs a penny. Big difference here for the average user coming in. When they look at those kind of fees, people just cannot afford those kind of fees on Ethereum Layer 1. This is a big issue for Ethereum, and the reality is that issue is not going to be solved this year. Yes, you can use Layer 2s. Yes, I encourage you to go and use Layer 2s. They're easy to use. We're getting more support for them. I think Huobi just announced recently that they're supporting Arbitrum withdrawals and deposits, so you can go straight in and out of Layer 2. We'll see more exchanges announce direct Layer 2 support as well, but it can't come fast enough. And even with Layer 2 support, the fees are still higher, although manageable, to be honest. $3 or $10, most people can afford that, but then the alternative is like, well, I could pay $10 to do a swap, or I could pay a penny to do a swap on another network. That is the trick for a lot of people, because the reality is too is that Arbitrum doesn't have all the coins you want, right? The liquidity is not necessarily there because the liquidity is not moving across Layer 1 and Layer 2 in a very, very meaningful way at the moment, at least not for a wide range of tokens. For the top stuff, yeah, but for the more exotic stuff, not at the moment. Now, it's not that gas fees are something the Ethereum team is not thinking about. Vitalik has proposed what he's calling multi-dimensional EIP 1559. Basically, the idea is that different transactions have different gas requirements, and that right now, the Ethereum network is seeing them all as the same. And so, if they were to modify EIP 1559 a little bit, you could actually have, let's say, a token transfer using up a lot less gas compared to a DeFi transaction. I know they already do, but it would use even less in that comparison. So this would be an interesting proposal. We'll see where this comes to, obviously, but this could be at least a bit of a stopgap to somewhat improve the fee situation on Ethereum. But obviously, sharding is how it has to happen. That is how Ethereum Layer 1 is actually going to scale, which won't be completed until 2023 sometime. That's a year away. That's a year away, and that's sometime in 2023. That's not necessarily January 2023. That could be December 2023. So, something to think about there. JP Morgan says Ethereum's DeFi dominance is actually at risk due to sharding delays. I would agree. I hate to agree with JP Morgan, but I agree. The reality is that for your average user coming in, if you have $1,000 or even $5,000 in your account, that's your crypto investment. That's a lot of people. You cannot afford to use Ethereum. You can't afford to do yield farming. You can barely afford to do a swap on Uniswap. And sometimes, you're going to find the coin in there that you want to get, and you got to just bite the bullet and pay that cost. But most people can't afford this. And we have booming ecosystems on Avalanche, on Phantom, on Layer 2s now, where they have their own stuff coming in, on Solana, on Terra. I'm probably forgetting some popular blockchain names here, but it's happening, guys. It's happening. All these other chains are picking up users. Binance Smart Chain, that's another one. They're all picking up users. Again, we've shared this chart before, but start of last year, Ethereum dominance in DeFi was 97.2%. Ethereum dominance right now, 62.7%. You can see, of course, the downtrend all last year. I expect this downtrend will continue while fees remain high because new users coming in are not going to Ethereum. Oh, sure, the big institutional guys will be, right? Because Ethereum's got more history, they're going to perceive it as safer, et cetera, et cetera. They don't mind paying a couple $100 in fees in order to deposit $1 million on the Convex Finance or something like that. Not a big deal. But your average investor, they're not going to Ethereum. They're going other places. They're using other chains, and of course they are. But look, all this stuff is short term. This is what is happening this year and into next year for Ethereum. Pantera Capital's CIO came out and said that Ethereum could soon be behind 50% of all financial transactions. Think about that. That is, of course, if he's saying you roll the clock to 10 or 20 years, where are we going to be for Ethereum? Ethereum's not going away. The high fee situation will introduce a lot of users to other chains. Great. I'm happy that the chains exist. I'm happy the options exist. I like using those options too, even though I can flex and say, yeah, I can afford to use Ethereum Layer 1, but I don't like paying massive fees just because I can afford to do it. Doesn't mean I want to do it. But long term, sharding will come. Layer 2 transaction fees for Ethereum will be more user-friendly. The onboarding and offboarding process, we're going to see a lot more exchanges. Coinbase has announced they're going to support Layer 2. BINANCE is going to support Layer 2. Huobi, one of the world's biggest exchanges, is already supporting Layer 2 Ethereum. We're going to see more of that happening, not less of that happening, which will mean that it'll be easier for your average investor to go straight into a Layer 2 environment, which is awesome. It's exactly what we want to see. And we're also going to see a situation where your average user is going to be able to have a much better experience on Ethereum Layer 1 when sharding does come in, and sharding will come in. It is coming, it's coming, it's going to happen. It's going to happen. Until it does, other chains, of course, will continue to capture market share. But that's just the natural progression of markets. I'm still a big Ethereum bull. Ethereum is my number 2 investment after Bitcoin in terms of, the biggest percentage holding. Big Ethereum fan. Not a big fan of paying massive fees, but it's going to be a road to getting there, a journey to getting to a low fee situation. But it is coming. It is coming. Until then, we have Layer 2s, and we have a great range of options across the crypto space to use different chains. Anyway, just my two gway for the day. Your question. Do you think that the Ethereum upgrades are going to come fast enough for Ethereum to maintain enough market dominance? Or is it going to be too little, too late? Let me know down below in the comment section. Thanks so much for watching today's video, and peace out till next time.